Good morning, everybody. Welcome to the Morning Vol Report. This is Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to our Morning Vol Report. Mark did a webinar last night on trading Gamma. We will expand on that in our Saturday class on the 22nd of July. This, though, is free. It's posted to our YouTube channel. Check it out. He did a nice job. It was our most attended class ever that we've given since we've been doing these free classes. So check that out for sure. All right, now as we get to our action today, I forgot to do this. I'm looking at so I'm just talking away to everybody. But we'll get to, actually, because I can't help it, we have to look at VIX. Mostly what we have had lately is the weekend effect here. This is ever since last week you had that little the Donald Trump Jr. whatever. I think we got that spike, and then ever since then, a little bit from the Fed, and then it's all been downhill. At the bottom of the range for VIX again. So I don't expect much to happen on that score today. It's hard to take any more of the weekend out than they already have. I believe the liquidity providers started doing that on Wednesday. And whoopsie, if we have much left here. Again, there's a full dollar in here with a probably Wednesday markup. Monday markup should be 10.5. So there is a little room in these products. 10.5 settle, something like that, if all things remain the same into next week. And as far as the vol products go, not very much either. Place that of interest for us. So yeah, there's just not a lot of downside left in these things. Although we have decent contango, but there's just not a lot of drift left in VIX. So you could still see more weakness, but it's not going to be kind of the quickie drift that we have seen before. SPX, I think we should keep looking at time spreads in here, mostly because volatility now, as far out as you can see, is in the sixes. The market is pricing literally almost no movement for the July. The bank earnings came out. They were okay, not great. I think bigger problem was the CPI, and that sort of weighed on banks today. But you're looking at numbers that are, wave. Actually, I'm trying to remember this. You have a single-digit volatility for realized vol, and then you have actually lower volatility for implied. I just think there's something for us there. We'll look in the chat room today. It's just it's just not very expensive. Also, taking a little riff off of Mark's webinar, it's just very, very inexpensive. Like, the market is not going to move, literally. 6% vol is 30 cents, 30 basis points a day. It's just nothing. Interesting trades. I think I want to look at selling some put spreads in these. JP Morgan, Citi, Wells Fargo, take your pick. We'll just try to find the best one in all of them. Overall, banks did okay, I think. So they had a little run up, kind of a buy the rumor, sell the news. They weren't strong enough earnings really to propel them higher, so we'll take a look at maybe a little bounce play for them. And lastly, too, there's something else we have been keeping an eye on is FXI. Continuing to move higher on lower vol. That's something we've been looking at. I don't think that is going to change very much. Lastly, the Costco and Walmart, at least it was up this morning. They've been up the last few days. They continue to bounce. We looked at some cheap time spreads in there yesterday. Maybe we could look at more aggressive type of long trades today because there's actually, it looks like there's a little bit of lift in these names. And I'm getting a note too from Giovanni. EEM is similar to FXI. Very low vol, very, very low Vega risk. And, you know, with moving indexes, even if we just kind of keep creeping up, you can make money buying long-term Vega. Similar to a topic Mark discussed last night in the webinar. So when stuff is this cheap, you got to be real careful about what you sell. But mostly, too, you can get away with buying options that you normally can do. So we will cover that in our chat room this morning. And for Mike, myself, and everybody, Option Pit, hopefully we'll see some of you signing up for, again, go to our event page and sign up for how to actually trade these end user of all products, okay, to hedge some of your volatility exposure. That's what they're there for. All right, you guys have a good day.